Welcome, everyone. Really a pleasure to have you here for this session on unlocking innovation and scale in financial infrastructure. I'm Drew Propson. I head up the World Economic Forum's Tech and Innovation in Financial Services work. And I am pleased to be joined by a fantastic group of experts with me to really dive deeper into this topic. Before I do, I want to thank GFH for hosting us and bringing us together, creating this space. This is not only an interesting topic, but obviously a really important one. There are certainly a lot of interesting and important sessions today here in Davos, a lot going on. But this is, I think, key to the broader conversations that we're having here in Davos, because ultimately the financial system is really the backbone of the economy and then ultimately, by extension, society. So important, too, that technology is moving at an unprecedented pace. So we're seeing disruption and reshaping in just about every industry, but financial services in particular. Just a couple numbers here. We know that the financial sector is investing more than most other industries in technology. If we're just looking at AI alone, we're talking about a $60 billion investment globally in 2025. And we've been seeing over the last few years that it's about a 30% year-on-year increase. So we certainly don't see anything changing there in terms of scaling back. We'll only see more investment in this space, which means more changes also to financial services and ultimately the financial system. So we'll get into this in more detail in just a second here, but let me go ahead and introduce our panelists. I have here to my left Tim Adams, who's the president and CEO of IIF, the Institute of International Finance. Next to him, we have Andre Lorensko, who's the CEO of ADI Foundation.
Thank you for inviting.
Thank you. Thierry Culosi is next, who is the Chief Business Officer of SWIFT. Hey, Thierry. And then on the end here, we have Osama Nasser, who's the Group Chief Digital and Technology Officer of GFH Financial Group. So Osama, welcome. As we start, I think one important question that everybody would like to hear from you all is, as we're looking at the speed of tech moving so quickly, what do you think, more or less briefly, is the biggest opportunity for financial services with this innovation taking place? And Tim, I'll go ahead and start with you, please.
Sure. Well, there's a lot of opportunities. And as you noted, the sum of resources that are going into the space is pretty substantial. And the 30% annual increase, I don't see that adjusting anytime soon. If anything, it adjusts upward just because those sitting in the C-suite and many of those sitting here today know that we've got to continue deploying resources across the board, right? You've got to make a multiple set of bets in terms of what technologies that you're chasing. I think the most interesting is, I call it mass customization. How do we develop technology that allows the individualization of financial interaction, right? How do we, where every single individual has a unique experience that is defined and designed for them, right? It's not just mass production, it is mass customization. And I think the technology we're putting in place, whether it's tokenization, the use of AI, other products, and we talked about quantum just a few minutes ago, the combination of these things allow us to do that. I think that's revolutionary, and it will mirror the kind of customer experience that we have in other kinds of products and services. That's where we're going, and once we're there, we're never going back.
Yeah, great. Thank you. Andre, you want to add to that?
Yeah, I think from the my spectrum of things, I do agree with everything that was said, that currently we're on the verge of the mass adoption of the stable coins on the Web3 payment rails. We are overseeing the fast-changing environment with the Web3 and with AI agents and with agentic payments that appear. And we're going to see more and more the personalization of the payments infrastructure to cater to the end user and the financial institutions, as well as the change of the regulatory frameworks that are becoming more like regional frameworks. And I think that the one that will be the most inclusive one will end up winning the game.
Yeah, great. And Thierry?
I'll add to, thank you for having me. So from a SWIFT perspective, we operate in the back end of this financial ecosystem. So what I'm sharing is more about the wholesale space, because equally you read a lot about stable coins and there's huge benefit. We see equally huge benefit in what we call the wholesale system. You'll hear about trap liquidity that we can unlock, the speed of transaction. And I'm glad you mentioned the regulation, that we need to do this securely and in a compliant way. The one, because you ask us, what do you think is the biggest opportunity? I'm going to call it inclusion, because for this to work, it's not about throwing the good things we have. It's not about throwing a new technology to solve something that we've already solved. It's how do we use this technology to move us forward, to give us the things that we don't have yet. For example, the financial system is not 24/7. You know that it has holidays, has bank holidays and things like that. While the technologies of blockchains give you that capability to go always on, or the programmability. So there's many things. So I see inclusion as how do you use what you have today, so what we call the fiat rails, and how do you combine that with the digital rails of tomorrow? And it's not about throwing one out and saying the next one is going to replace it. It might be, but it's going to take time. So if we want to bring scale, it's the ability to connect the two, to bridge the two, to interoperate the two so that we can move along a forward path.
I like that inclusion. Good. Osama?
I think, again, the most focus we should stay focused on is leveraging AI to create a very efficient financial operation. And I believe if we can use AI the right way, then AI is going to change the way we operate. Yeah.
Excellent. AI it is. Thank you. Andre, I want to come back to you for a minute here. You mentioned regulatory environments, and as we see, as we're looking at these various technologies, obviously we need to have a good, strong, enabling regulatory environment with checks and balances. Each jurisdiction is certainly going to have its own goals, but are there maybe some commonalities or some frameworks that can be quite useful in terms of having a good, strong regulatory environment?
I think that in general, the state regulation is the key for the mass adoption of all this digital transformation, whether we're speaking about the payment rails or agentic payments, or the whole industry combined together. And I think that currently we're overseeing, even with the Western world, the regional frameworks to regulate it. We see the Genius Act within the US, which caters more towards the regulation of and the backup for the quasi-corporate stablecoins. We do see the micro-regulation in Europe, which has a slightly different view on things, more supporting governmental issued the stablecoins with euro. And as I said before, the systems which will be the most inclusive to create these unified layers which seamlessly interop with each other. As was said, with the fiat and digital rails, with on-off ramps, with digital back to fiat, with agentic payments, with the data streams, I think all this will create the environment where it will be unprecedentedly extreme new level of data monitoring systems, whether it's for the monetary policymakers, whether it's for the IML agencies, or whether it's just for the corporate players in the market.
Yeah, excellent. Tim, you have a very good global lens as well, and we were just talking earlier about your upcoming travels. What are you seeing in this enabling regulatory environment space?
Sure. Well, I think what you see within countries are sandboxes in a variety of different lab-like environments where you could do sort of safe testing, right? Then at the country level, you see a variety of countries that are at different points on the technology frontier and on the political frontier. For example, in the U.S., the new administration, they relaxed rules on AI and said, okay, let's let this run at a pretty fast pace, while passing legislation and regulation and putting in place a regulatory framework, the Genius Act, that gives stable coins a sort of regulatory certainty, and with the possibility of exporting that regime to other jurisdictions. And then at the supranational or international level, you have the BIS, their innovation hubs, and then you have entities like the G20 that has a payment agenda. All of it at the international level is how do we make sure we have interoperability, irrespective of what happens at the country level. How do we ensure that different systems can talk to one another so we can operate cross-border? But the question is, are we seeing divergence or convergence? And it's not clear. I think you do see in the U.S. a very aggressive administration-led effort to promote different technologies. Stablecoins is kind of the topic of the day, but tokenization is coming, and I think that's actually a more powerful technology and tool. AI, quantum, again, where other jurisdictions are at different points on that spectrum, the technology frontier. They'll learn from each other, and then hopefully you'll have some semblance of some commonality that you can narrow the differences so that, again, cross-border internationally, we can function as a system, not as 190 different unique entities operating independently.
Yeah, excellent. So as we look at this system, let's dive deeper a little bit into some of the specific technologies. Osama, you mentioned earlier AI, and agentic AI is sort of the big buzzword or phrase right now. Where do you see this playing a strong role in banking and investment going forward, and what do we need to have in place in order to, what safeguards do we need to make sure that these autonomous systems are safe and reliable?
Okay, so before we talk about that, it is very important to talk about the foundations we need to build before we jump straight to the fintech, to the agentic AI. Agentic system only work if the foundations under them are strong. From what we have seen, there is a clear maturity curve. First, digitization with a clean, structured data you should have in place. Otherwise, agentic AI won't work, won't give you an accurate information. Second, from what we have seen also, assistive AI, you need systems around you to recommend, summarize, support human decisions. This is something essential you should start with before you start deploying agentic AI. From what we have seen at GFH, deploying agentic AI is not a starting point, it is a graduation. And you graduate when you have the right foundations. So back to your question, I believe agentic AI is moving banking from just assist to operate. It doesn't just answer questions. We are not talking about a traditional AI agent. When we talk about agentic AI runs the workflows end to end. It will also, improve the customer experience. We will use it to automate financial operational completely end to end. We are talking here about customer onboarding, KYC, AML, risk assessment. A lot of things we do, we waste time on today in banking. Agentic AI can help us to automate. At GFH, I would like to share our experience at GFH when we started building our foundation last year. It was a good experience because we managed to clean our data. We managed to structure it in a good way. Data can be audited, it can be traced, and then this helped us a lot to move to the second AI phase. And a few months ago, we released our agentic AI. We started with our first use case. The plan was to implement a traditional call center across the group, but then we stopped that project and we moved to what we built, our new agentic AI, and the results were very positive. In the first few weeks, we received around 2,000 calls. 88% of them was answered by the agentic AI, and only around 11% was handed over to human agents. Some of them was assigned to RMs as a task to call back the customer. Sentiments was very, very positive because, again, agentic AI is not going just to run the operation. It's going to generate some useful insights for you. Insights can be used to improve the customer experience, improve the operation. Of course, this cannot be done without having good safeguards around the agentic AI. It should be, whatever you are going to build, it should be audited. You should have a clear audit trail explaining why the agentic AI decided to go that direction. It should be explained why the AI, for example, when we talk about decisions, We should make sure that the agentic AI will not take decisions based on fear of gender, for example. This is female, this is male, or nationality, or income. So we have to keep monitoring the performance and the behavior of the AI. Other safeguards, maybe we should have at the beginning, this is what we did at GFH, a very clear ethical framework just to make sure that the agentic AI, whatever decision will be taken, it will be taken according to the regulator and according to the being fair with the customers. Something learned from our implementation, and we should always remember three things, and this is from our experience. AI is not going to fix a broken process, so we should make it very clean from the beginning when we digitize any workflow. AI is not going to work if you don't have clean, trusted data. Okay, and the last one, AI still needs us. So human in the loop is also something very important we have to keep in mind. So this is about agentic AI.
Yeah.
Yes.
Now, I like those last three bullets, but I also really appreciate how you mentioned the very strong importance of having that foundation, that data layer right before you can really build on and, like you said, graduate to the next level. If we're graduating even further and we're really looking, maybe zooming out a little bit, Thierry, I want to come to you on, how are we looking at AI converging with other technologies, or AI and real-time digital payments, for example, as well as digital assets? What is the role of infrastructure players versus maybe banks, fintechs, and others as that convergence takes place?
Yeah, so thanks. So the question is, am I graduating? Most definitely as infrastructure, we're looking at all those technologies. I'm not going to repeat. Osama, I can see you're a practitioner. I'm trying to see what is net new that I can add to this. So where infrastructure are already using AI. I mean, there's not, anomaly detection is a good example, improved process automation. Maybe people are not payment experts here, but when you send a payment to any place, you got to know that there's a lot of complexity of what data you put in the payment. And today, this is a web of complexity. Every new system that comes, every new stable coin that comes, every country you go, you have to graduate, you have to go to university to know what you need to fill as a bank, as a provider of payment services, for that payment to arrive at the destination with all the information that it needs, right? And this is where technology is bringing a lot of hope. This is where technology helps inclusion, because these things were accessible only to the very big players. And with technology, you have a chance to kind of uplift the ecosystem without requiring a lot. So I have a lot of hope for, I'm not even going to call it agentic, just basic AI. You could already do a lot to elevate the end client service with implementing that with the right guardrails. The role of infrastructures, and maybe Tim will probably be able to elaborate on that, as he works a lot with public and private sector. To unlock that technology, you need a combination of technology and non-technology. The biggest issue is, how do you agree all these rules that you say are so important to make sure that the technology is staying within the boundary? And a private entity alone cannot do it. You need those forums like Agora, where you sit, you decide the rules, and you agree. And this is getting increasingly complex, let's be fair, as different nations also have their own interests in mind. Yeah. So we really need to believe that at the standardized level, there is an interest for the common good of all economies. And to unlock the power of technology, we need to put that first and foremost. So I do think that it's not just technology helping a company like ours do a better job. Company like ours, the public and the private sector should come together to enable us to unlock the technology. And that means sitting on the table, reviewing those processes. Do you know that in some countries, you send a cross-border payment, the bank has to pick up a phone and call the client and say, why do you want to receive this payment? And none of the stable coins you don't need stable coins to make the payment faster there, right? If you don't change those regulations, technology is not going to help you. Right? So I will close by saying I really have a lot of, and I was very much impressed when I go to the GCC countries to see how the regulator is working next to its ecosystem of banks to say, okay, how do we unlock the technology benefits? So it's this technology panel, but I'll insist more to the non-technology aspects so that we can really truly unlock the technology benefits.
Yeah, excellent. Tim, I do want to come to you. As he mentioned, you do work heavily with public and private sector. I also want to think heavily about the governance structure. So we talked about safeguards in general, but what do senior executives, CEOs need to be thinking about when they're looking at that governance structure for AI?
Yeah, well, you heard quite a bit here, and I don't want to repeat, but I will just further emphasize the importance of human in the loop. Also emphasize inclusiveness. That's what we all want. I think that's coming, but the corollary is that we're going to have more frauds and scams, something we're spending a lot of time on. So we got to ensure that their system is safe. As you have more individuals coming into the system, maybe less sophisticated than previous users, we have to ensure that there is consumer protection. And that's going to be a challenge given that AI is being used for a variety of nefarious purposes. So we have to ensure that we protect consumers because there is societal concern and frustration and a little bit of anxiety about the speed with which all technological changes, not just AI, it comes with every technological revolution. We have to understand and address societal concerns. So that goes back to the public-private partnership. I've worked in both the public and private sector. They just function very differently. Different timelines, different risk trade-offs, and the challenge we have, and I think the opportunity is to create a public good by working together. But you have very different approaches, right? Siloed, those of us who've worked in the public sector, you get certain parts of the organization that get very drilled down, very siloed. We need these individuals, these entities to talk across the silos, but also understand for the private sector, it's about ROI. You've got investors, you've got to ensure that you've got a wide range of demands on your technology budget. So you've got to constantly go back to your board and explain why you're spending 30% more. While the public sector has a different perspective, right? It's not ROI. So I think this Project Agro, which my colleague is leading, is a truly revolutionary product, but the combination of public-private make it a challenging process, but we have to build in the guardrails without question. If we don't bring society along with us, if we don't protect consumers, if we don't address scams and fraud, and we don't bring that along, then we're going to find that we've pushed very hard and very fast, but we haven't brought society along with us.
Yeah, that societal piece is very important. Switching gears a little bit, or looking at other technologies that are important to the financial system and evolving very rapidly, I do want to move to blockchain-enabled innovation here. And Andre, question for you there. What do you see as the outlook for digital assets, and maybe what policy changes could be impacting the financial system there?
Yeah, as I already said, I think that the state regulation is the key here to create like an enabler environment for this. Fragmented markets, I think that's where the room for fraud and scams mostly appear. And I think that as an origin, the right state regulation, and then with the right technology application for the right use cases as an enabler will create this unified layer where it will be clear routes from the data origination standpoints and transparency routing from one to another. And that's what creates the prevention mechanisms to monitor all the scams and frauds that can happen. But on the other hand, this technology evolvement, especially the blend of AI and the Web3 systems, I think creates the environment for possibility of creation different artificial products, and exactly the right regulation with the right monitoring systems should prevent the anomalous activity that can happen with these liquidity elements. When liquidity elements, I speak about it can be either financial liquidity, or it can be tokenized assets, or it can be digital assets, because that's eventually everything is a data. And when I'm speaking about the modular compliant Web3 layered systems, whether it's for the financial sector or whether it's for the data origination points for the AI agents and agentic payments, that all should work together as unified layer.
Excellent. Thanks so much. A lot of insight there. I want to maybe expand on that as well and hear a little bit about tokenized assets, which have really had a lot of momentum this past year. Thierry, how do you see the tokenization of assets moving forward, and what does this mean for financial infrastructure?
Yeah, I think it's got the potential to really transform the industry. I mean, there's not a meeting I went to this week where this was not the project. And then to say it bluntly, the questions like, well, do you believe in stablecoin? Or what about tokenized deposit? Which is the currency? I mean, all of you know that these are the debates that are happening, right? So I'll give you a perspective. I'm not suggesting it is the right one, but if you project in the future, and if you're projecting as an end customer, you don't care whether your money is held into a token or not a token. What you care is what's the value you have. You know, how many dirhams am I holding? Dollar, euro, or Swiss francs, right? In the end, what's behind it is a form factor, and it's an element of trust, right? So our job, it's really to see, if you project in the future, you want to make sure that value can move regardless. And let's not rush too quickly onto the tokenization. There's a lot of great things that happen in the world because sometimes there are a lot of bad messages. So the ability to send money from any account to any account can happen very fast. We need to make sure that we improve the regulation. We up the regulation to the ambition. We up the technology, and I think we'll get there. We can connect now accounts to wallets. So we connected to 4 billion accounts. Now we extended it via partnership to another 3 billion wallets because parts of the world are using more mobile systems. Digital assets are going to come and complement and power this ecosystem. They're not going to replace it, is our view, right? So the first thing to say is we're not going to throw away all these accounts and all these wallets. We're going to leverage it. Maybe there'll be new wallets coming in for sure. So the idea is how do we make sure these technologies interoperate together? Because that's what's going to give us, we build decades to put controls, security controls on those layers. Nation state make sure that they can manage their currencies and not lose control of what is happening. Compliance, screening, we're going to reuse all of that. And then we're going to leverage now the new technology to close the gaps. So what are the gaps that people are so excited about in tokenization, right? I mentioned one, always on. Because today, we don't have a system that is always on. It has operating hours, and it is closed sometimes. So this is one place that we're working. We launched our ledger. We announced it 4 months ago. We're working with 40 financial institutions, and this is where they're focused. How can I enable my end customers, my corporate, to send money on a Saturday, on a Sunday, after the closing hours, right? Because this is what they want to offer to you. But they want to reuse the same controls that are there. So back to your question, what we're seeing is a combination of what we call it the fiat rails and the digital rails. You make the two coexist, you accelerate, and you don't bypass the controls on that. So a lot of momentum, like we all watch Netflix, right? But we still have a TV. I still have a TV at home. So these things are additive at the beginning, right? And the path to making it additive is then going to open up, and Andre is working on Web 3.0. He's already a few years ahead from me. But as we make sure, some people have to make sure the foundation is there, and some innovation are going to make sure they're capturing the new use cases that we haven't thought about. But we're going at it, and I think that's the collaboration. Tim was saying regulators have a different perspective than incumbent. I perfectly see that. One is going to look at the safety of the system, making sure it's well. The other one is going to look at how do I better serve the clients, things like that. So I wanted to give everybody a bit of a perspective that it's not an or, it's an and that we're going to be seeing in this space.
Yeah, that makes a lot of sense. And each actor has its own niche there. So wonderful. Osama, I want to talk a little bit about digital payments and come back to you. So as we look at maybe digital wallets, we're looking at real-time payments. These are going to just become standard. So how do you envision maybe fintech-oriented or payments-oriented fintechs in this space? How are they going to remain profitable when we're really seeing a commoditized environment here?
Yeah, I totally agree with you. It is if you talk about only price and speed, they are no longer differentiators. And I believe fintechs, they will only differentiate by using the data they collect from the payments, to use them to generate offers, products for their customers. The data they will collect from payments, it can be used to provide customers, users with some smart insights, to improve your experience, to help customer identify risk, monitor their cash flow, help them to do a proper budgeting. I believe these are the features that will enable fintech startup to to compete in the market. Other things, I believe they should start offering embedded products, financial products within the payment process. Just imagine if a fintech, or for example, a fintech startup will offer you a lending from the sales you are making, and then you pay from the income you are generating. So I believe this kind of features will enable them to create a unique value that will differentiate them from others.
Yeah. Okay. Excellent. Good to see that opportunity out there. We've talked a lot about opportunities and wonderful applications of innovation. If we look at things moving so quickly, we also have to be very considerate of maybe challenges surfacing or some of the risks surfacing. So Tim, I'll come to you. How do you see, or how do we capture this innovation, but also balance it with maybe needs that we have in the cybersecurity space? We also see fraud and scams increasing using technology for these. Well, what can we do to make sure that that balance is met?
Well, I think you're right. We have to protect the consumer because the consumer loses confidence and trust. It comes down to trust, and my colleagues hear me say this all the time. The system is about trust. Once you've lost it, it's really hard to get it back. So we have to ensure that you have an appropriate amount of consumer protection that doesn't quell or squelch technological innovation, but certainly puts guardrails so that you can continue to innovate at the frontier without and bring society along, right? So you got to deal with frauds and scams. You need robust and resilient systems. That's a huge public sector interest because we need to ensure at a time in asymmetric warfare that when systems are under attack, and they are constantly under attack, whether it's private or public sector, that we have resilient systems. And then remember that these systems are part of larger systems, right? The way we communicate globally, undersea cables, million miles of oversea cables, 99% of our traffic, all of the emails we send, all go on these cables, right? What are the vulnerabilities there? So there's vulnerabilities at different levels, and we need to ensure resiliency across each of those different layers as they're all interconnected. But we've got to start with the individual. We have to ensure that consumers are protected. And I tell you, frauds and scams are going to be a huge issue for the next couple of years.
Yeah, definitely. Osama, you've got a great tech background. Anything that you can add to that or any thoughts you have, particularly, again, cybersecurity, fraud, scams, these things sometimes have technical solutions or sometimes we can use technology to actually combat the problem itself. What do you think?
They are both innovation, risk are moving at the same speed. We cannot eliminate risk, we cannot stop fraud. And the only way to stay ahead is by, again, using AI to help us by deploying real-time AI defenses. This may be the first thing we should do, use AI to help us, prevent, create tools that can protect the customer, study the user behavior and come up with, quick controls that can react in milliseconds. The second part, which I believe it is also important, no fintech can fight fraud alone. So we need to work together, banks, fintech, and regulators, all together to have maybe a joint fraud system or maybe a joint monitoring system that can be used by all of us to help each other, to predict, to detect any abnormal behavior. So collaboration, I believe it is super important. The last part from practical point of view, we need to create some good standard in the market. We cannot use standard and you use another standard. So regulators in MENA, I believe they are pushing this forward. They have come up with, a few years ago, they come up with what we call it in Bahrain, MENA open banking standard. It's similar to UK standard for open banking. This will ensure what? Will ensure that all banks are following one standard, one cybersecurity framework, which will, support all of from framework supported by all of them. Other things, maybe we need also to come up with a standard APIs that can be used by all banks, fintech, again for the same purpose. And the last thing I think about is, you know, the again using AI to build maybe a joint system across all banks, you know, to come up with a detection system that something can be embedded inside our digital services, which will again, you know, support and provide customers with strong protection.
Yeah. Good. On that protection piece, it links a little bit back to what you were saying earlier, Thierry, as well on inclusion and how are we seeing these impacts happening large scale. If we're looking at large scale deployment of digital finance and all of these innovations, what are you seeing across the globe? And particularly if you're thinking about maybe traditionally underserved regions, how is this impacting these regions?
Yeah, so just a comment, we're not going to talk about it, but I think quantum merits a discussion on the security side.
Yeah.
And then I was pretty impressed as well in the capabilities of what they call confidential compute. So when you start to combine these things can be. But back to what we see as emerging markets. Well, surprisingly, first of all, we have to know, I work in the payment space. Many emerging markets have leapfrogged mature markets when it comes to digitalization. You look at the mobile payment ecosystem, right? They've done much better than a lot of markets that still use checks, that still use other, Tim, I didn't mention any country. So you have to recognize that it's not, we see things happening that we can learn from different. I have the privilege to work for a global company, and everywhere I go, I learn something. And it's how do you assemble these things in such a way that actually makes a very strong and good system. So I do see, when I mentioned wallets before, we Swift, we agreed, we helped the bank now connect to wallets because that wallet ecosystem became so big that the bank had no choice but to connect with the wallets as well too. And that helped inclusion, that helped many other things. And I hope that will happen with other types of ecosystems. So they have an edge, I'm going to say, in some areas. Mm-hmm. On the wholesale space, where I do think that we need to do a bit more work, is back on the regulation perspective, because you have to recognize that in some countries, managing their currency, their exchange rates, their capital control is sovereign to them, right? We have to recognize that there's a need. And in the back end, the world still operates on very few currencies, right? So making sure that every currency is included and you can do flows. I mean, at Swift, we have 6,000. We connect, I think, 40,000 pairs of markets, country to country, and about more than 6,000 pairs of currencies. These may increase in the future. We'll have even more currencies because every fiat currency will have its digital equivalent multiplied by N. So we want to make sure there's inclusiveness in the back end, making sure that value can be exchanged, respecting the controls that there are in some of these markets because they need to for different reasons, right? Maintaining control of their capital, liquidity, their FX rate is important. We need to find a way that we can allow for them to have those controls, but at the same time allow transactions to be fast, seamless, with no friction, which is a difficult art to do, but I think technology can help us there. So I do see a good collaboration. We can learn on the digital experience. When we unlock the power of digital assets, let's make sure they remain inclusive of any currency, right? And that's a bit, I think, the journey that we're on.
Yeah, excellent. I like that the art and the science of it is going to be very important. I realize that we are going to be running out of time here quickly, and this question might open up a whole other conversation that we could have a different, separate panel on. But I do want to talk a little bit about the geopolitical environment, and that's the impact currently on the current situation on innovation, the deployment of innovation. And Tim and Andre, I'll come to you both on this. What are you seeing across geographies in terms of the immediate impact of the geopolitical environment? How are things changing, shifting because of certain tensions perhaps, or certain new friendships taking place? Tim, I'll start with you.
Well, it's changing by the minute, obviously, as we will witness later today here. and it brings in lots of uncertainties. Look, technology and leading edge technology is a critical part of each country's economic and national security. And so it's being invented, supported, deployed in a way that promotes that national interest. And hopefully alliances still exist in a way that that technology can be shared among those countries that have shared interests, shared values, and shared security interests. I hope that's still the case. I think it will be. I hope that's the case. But there is the risk of fragmentation, right? Fragmentation in terms of cooperation across a whole range of topics, whether it's scientific research or innovation sharing or just economic cooperation. That poses a risk to innovation, especially as we go back to the topic I raised earlier, which is interoperability, the capacity to move seamlessly across borders, so that it goes back to the customer experience, the mass customization. As a user, I want to be able to buy assets and move value anywhere in the world. And if it becomes fragmented and fractured, and we end up putting sand in the gears of the global system, that becomes more complicated. And we defeat this idea of a seamless global access, and inclusion doesn't look like what we'd like for it to look like in an ideal state. So I hope that we continue to understand the power of the network, which is a network of an integrated system with shared values, shared rules, shared systems, and that we don't walk away from that, because I think we would find ourselves 20 years from now weeping at the loss of efficiency, growth, prosperity. There's a lot that we could lose, and I think there's a lot we take for granted.
Yeah, thanks very much. Andre?
Yeah, I think that currently we do see this regional development of the governance and the regulations. I think in the next couple of years we're going to see much mature regulatory frameworks, but still, from my point of view, considering current geopolitical landscape, we're going to see fragmented regulations in different regions. But I think that the technology layers and fragmented regulations can coexist within the one technology layer, so it can handle different user applications or payments-wise, tokenized assets-wise, whatever, etc., and coexist within different regulatory frameworks. And current growth of Web3 adoption, whether it's tokenized assets or payment rails, combined with AI payments and digital identity systems that are currently being deployed, just in a couple years, we're going to see, I think, very mature, rigid, programmatic payments architecture that can potentially change the whole landscape of how the business and payments are conducted. Because me as a user or as a company, if I would have an ability to do super cheap programmatic payments triggered from secure environments without me interfering with the bureaucracy, because it's all monitored within the seamless layer, I can, let's say, change and do payments not once a month, but once an hour. And same way, do my accounting and see the health checks of the company every hour in online, not wait till the end of the month in order to collect all the financial data and see for my decision making, what should I do based on the data. So then programmatic payments and these online finances can be a reality. I think we're not too far from there. And that can trigger the whole paradigm shift of the whole business architecture of how it's constructed, together with the compliance, together with the fiat and digital rails, together with agentic payments, and operate in one seamless layer.
Yeah, excellent. Thank you very much. We are going to have to wrap up here, and I have one final question for each panelist. Please keep your answer fairly brief. But the question I have for you, is there anything, when we're talking about innovation in financial services, is there anything that you think maybe is not getting sufficient attention, either on the opportunity side or potentially on the risk side? I'll go down the line here. Tim, you want to start?
Well, we talked earlier about quantum computing. Yeah. I think it's here. I think it's real. I think it's immediate. And I think it's quantum mechanics makes my head hurt. It's very hard to understand. It's a tremendous amount of resources going into it, both the public and private sector. I think it's revolutionary. It will change the way that financial intermediation, but just computerization happens. It's here, and I think we had better buckle up and get ready.
Great. Quantum it is. Andre?
I think to keep it short, I see not very often, but I think that it's important to pay more attention to it. The origination of data of the behavior of the AI systems. Because currently we do see lots of user-facing applications as well as talks about the sovereign AI. But currently we're not very much in control from the auditability standpoint, the origination of data that being processed in order to deliver the AI message to the end user. And I think that this origination control mechanisms and what's being processed, this supply chain tracks, it's really important what to keep an eye on.
Oh, great, thank you. Thierry?
I'll go for it. Trust is going to be a lot more difficult to sustain in this geopolitical world. So, this is the world we live in daily, day out, on the geopolitics and how we do that. So companies are trying to do the best they can to earn this trust, but they're going to need the support of the different nation states. So I was thinking about if you have to develop innovation, you think innovation as how do I do the best service for the end client? Now you have to also think about another stakeholder, which is the sovereignty. Because if you want to scale at a global level, you need this trust, and you have to work very hard to sustain that.
Yeah. Thank you. Osama?
I believe we need to focus more maybe on the data analytics part. It's very important to understand the customer needs before we push the digital services to the customers. We need to do a lot for this, and I believe the only way to do that is by, again, using AI to help us to understand the data, to come up with exactly what can make our customers more happy.
Yeah. Excellent. Customer at the center there. Thank you all so much for sharing your expertise and your experiences. I think we all know that this is just the beginning of these types of conversations as technology moves forward so quickly. But what I heard is we really need to start with that foundation, build up or graduate from there, keep society as our North Star, think about the inclusion piece, and then make sure that we have collaboration. So you all have done your part definitely on the collaboration front, and look forward to continuing that. Thank you.
Thank you.